Our star of today, Warren Buffett, bought 5% of this company for $4 million, only to sell it shortly after, missing out on an absolute fortune. Stay tuned for another fascinating investment story. Welcome back to WellPodX. Tony here. Today's 14th of March 2025. Here on this channel, we break down everything related to money, investing, crypto, and psychology. If you want to stay ahead in finance, be sure to subscribe. Now let's dive into today's market update. Bitcoin is currently trading between $81,000 to $82,000, but our focus of today is Ethereum. After reaching a peak of $4,000, it has retraced to now $1,890, a level where it exactly was 4 years ago. And I've also spotted that Ethereum's price kinda look like Tesla, another stock that we talk about on this channel. Both assets has reached the local top on 17th of December 2024, and both of them have been halved since. I know this decline seems discouraging, but it also presented us a prime buying opportunity. Remember when Bitcoin was at $20,000? Very few people were interested. And when it dropped further to 18,000, it was largely ignored. We must ask ourselves, have the fundamental changed since Ethereum was at $4,000? If anything, it's going to improve with the upcoming Pactra upgrade. By steadfastly continuing a dollar cost averaging strategy during this downturn, we're potentially looking at substantial gains. Just look at any other good quality asset. Purchasing when others are disheartened can lead to significant reward. And for Ethereum, you'll thank yourself when it gets to 6,000 or even 8,000 later on this year. Now let's get into today's morning deep dive. Today I'm going to share with you a fascinating investment story. A story that underscores the importance of patience and long-term vision in investing. In 1966, the young Warren Buffett saw potential where others didn't. At just 36 years old, Buffett was already making waves in the investing world. But he was far from the legendary figure he would later become. That very year, he had a meeting with none other than Walt Disney himself. At the time, Disney was not the entertainment juggernaut we know today. It was a company still finding its footing. With its flagship Disneyland park just over a decade old and the modest market valuation of under $90 million, a figure that seems almost laughable in hindsight. Buffett, however, had a knack for spotting undervalued companies with a strong long-term potential. He recognized that Disney wasn't just a film studio or a theme park operator. It was a storytelling empire with a brand that resonated across generations. He famously compared re-release like Snow White and the Seven Dwarfs to renewable resources, highlighting how Disney could keep generating revenue from the same film decades after decades. The characters weren't just beloved, they were assets capable of being monetized indefinitely through merchandising, licensing, and re-release. Impressed by what he saw, Buffett didn't hesitate. The man invested $4 million in Disney, securing a 5% stake in the company. That may sound like a small amount now, but back then, it was a serious vote of confidence in a company that many investors considered a niche business. However, despite his brilliant insight, Buffett made a decision that would later haunt him. Just 1 year later, in 1967, after Disney's stock had doubled, he decided to cash out, selling his stake for a $2 million profit. That is a lot of gain for just 12 months. At the time, this may have seemed like a great trade. After all, doubling your money in a year is no small feat. But the history had other plans. Had Buffett held on to the original 5% stake, its value today would be somewhere in the range of $10 billion to $12 billion. Buffett himself later admitted that selling Disney was one of the biggest mistakes of his career. Over the years, he repeatedly expressed regrets, acknowledgement that instead of selling, he should have been buying even more instead. It was a harsh reminder that even the greatest investor in history aren't immune to short-term thinking. So Whale Crew, what's the takeaway for us? The lesson is crystal clear. Patience pay. It's incredibly easy to get caught up in short-term gains and panic over market fluctuation. But true wealth is built by identifying great assets and holding onto them for the long run. Whether it's a blue chip stock like Disney or a promising cryptocurrency like Ethereum, the key is understanding the intrinsic value and having the conviction to stay the course. Because as Buffett's Disney blunder shows, sometimes the biggest mistake isn't what you buy, it's what you sell too soon. Now let us get into today's top news. The first news, as we previously mentioned, that Tesla stock has been a free fall since last Christmas. Ross Gerber, a notable investor, had expressed concern over Elon Musk's management decisions, particularly his focus on ventures outside of Tesla. Gerber suggests that Musk's involvement in other projects might be diverting attention from Tesla's core operation, potentially impacting shareholders' value. He emphasized that the need for leadership that prioritize Tesla growth and address the challenges the company faces in the competitive EV market. This is a funny piece of news really to me. You think a company as big as Tesla is only relying on one person to do their job right. In the second news, in a stark reminder of the risk associated with high leverage trading, an Ethereum trader recently faced a staggering $308 million loss. The trader had taken a 50 times leveraged position, betting on Ethereum's price is gonna go up. However, due to market volatility, the position has been liquidated, leading to this monumental loss. We've been saying on this channel multiple times, you gotta understand the risk involved in leverage trading and the potential consequence of market volatility. Do not trade with leverage, as you're basically trading with money that you don't have. Do not trade at all if you can. It's just a terrible idea for most people. The third news, CZ, the founder of Binance, has recently come forward to address allegations surrounding the company's operation. He firmly denies any illicit activities and defends the platform's commitment to compliance and transparency. CZ has also touched upon recent political events, emphasizing Binance's neutrality and focus on providing a secure platform for its user. This comes amidst increasingly regulatory scrutiny in the crypto industry, highlighting the challenges exchange face in navigating global regulation. That's a wrap for today's episode. Subscribe for daily updates in weekdays. Stay invested. Have a nice weekend, and I'll see you next Monday.